everyone, my name is Ram Dhamija. Welcome to my channel. So today I'm going to discuss a very important topic with you. It's about the price of silver and whether is it a good time to invest in silver still, and what is the future outlook, how does it compare to gold, how is the gold silver ratio looking like, and what are the other things that are moving the markets. So there's lots to talk about. So let's begin today's video. So we all have seen how silver market has moved recently in the last 3 months. There was actually not too much movement initially, but after a certain point in time when there were news about silver shortages coming in, then the move really went parabolic. So the last 4 to 6 weeks have been really very sharp for silver. We have seen moves in silver which don't usually come even in decades, and the price of silver actually moved up from about $30 to a troy ounce. It crossed 50, and this 50 also crossed after 2011. So it was 14 years of wait for people who were holding silver to see the prices go above the 2011 peak. And the last time this happened was in 1980. So it took almost 30 years to reach the 50 level again, and then another 14 years to reach the 50 level again. Now, is this sustainable, or this is also, one top made and then silver is going to go back? We will have to see, but I don't think that this is a top that is made and it's not going to be tested for long, simply because the demand for silver has risen a lot. And I will show you in the charts how silver demand has gone up through the roof, and what are the new applications that are coming out in silver which is ensuring that this demand will be continuous. So I will take you through some charts to explain how silver is moving. So this is the silver chart which you can see. This is silver in US dollars. Okay, and this is a monthly chart. So as you can see over here, that silver was made a bottom in somewhere around 2020 at about $12 an ounce, and from there it shot up immediately after COVID, and it has been in that particular range. So the levels it touched in August 20 were the levels it was trading as back as April 25 also. So like I said, in the last 3-4 months this rally has really taken off, and from there, from April, from 29 levels it went up all the way to 54. So this has been the parabolic rise of silver as we have seen in the last about 6 months odd, and there is actually no looking back. If you look at, this is the price of silver in rupees kilo. So over here the movement is not so pronounced. Okay, so for example, the 2011 peak that you saw was kind of achieved in August 20 itself. So that is because there was depreciation of the rupee, and also the fall is not so high. So for silver, for example, in April 11 touched 68,000, and in 18 it touched a bottom of 30,000. So that was basically a 50% decline. But if you see in the price of dollars, the decline was much sharper. So from 50 in April 11, it actually went as low as 11,000. So that's like almost a huge 80% drop, whereas in INR it was just a 50% drop. And from there the rally has been much more pronounced, and silver actually peaked out at about 155,000 rupees to a kilo. These are all the international exchange traded prices. The moment you go out in the market to buy silver, you're going to get it at 185, 190 during peak. Now it has come down a bit, but there is always a premium on physical silver over the exchange traded rates. Now also another interesting chart to look over here is this. This is basically the silver moving averages in INR. This is for the silver ETF. So the silver ETF, the SilverBees, it comes by the name of SilverBees, is trading at about 148 right now. If you see the 200 DMA is at about 110. So that's a good 30-35% still higher in terms of from where its 200 DMA is. And also if you see in terms of the silver chart, the 20 DMA crossed the 50 DMA somewhere in the beginning of the year in April, and from there it has just been one way up. So that's also a bullish sign. There is no convergence of 20 and 50 also happening. So till the time that happens, silver will remain in a positive territory. This is a very interesting chart I wanted to show you. This basically shows the demand for silver. If you look at it, this shows the CAGR for the last 10 years from 2015 to 2025, and mind you, it is not taking into account 2025, in which you will see more pronounced demand coming in from certain sectors. So this basically, as you can see on the right, it shows what is the growth in each particular segment. So electrical and electronics silver growth, which basically takes 485 million ounces of demand every year. It has grown at 78%. And photovoltaics, which is the next big one, at 232, has grown at 289. So photovoltaics will be your solar, uh, basically, and other industrial is grown at about 30%, and investment has only grown at about close to 31%. So that's also grown well, but jewelry has grown at only 4%. So you are seeing that silverware and jewelry is going down, and photography, which used to be the original demand for silver, has actually declined by 30%, because now I think it's all digital cameras that are used. So here is something that you can see, that how crazily electrical and electronics, photovoltaics, etc. demand is going up. And also one more thing to note is that the silver demand versus supply, there is actually more demand that has been created over the last 4 years versus the supply that is available. So there is a perennial shortage for the last 4 years for silver. That is because silver is not mined on its own. Silver comes as a byproduct of mining zinc and aluminum and other things. And second thing also is that the exponential demand that is there cannot be fulfilled, because earlier silver used to come out in ratio of 1:32 for gold from the earth. But now that demand, extraction is actually gone down to as low as 1:7. So earlier, for one ounce, the ratio was 1:7. Now the ratio, whereas if you see in the price ratio for gold and silver, I'll show you in that also, the ratio between gold and price silver is 1:82. So there is some sort of a disconnect. Whereas when you go to mine, you are getting it only 7 times more than gold. But when you're going to buy, then silver is, you're getting 82 times the price of the gold is 82 times the price of silver. So there is some disconnect over there which needs to be corrected. And one reason for that is that central bank buying in gold has ensured that this ratio has gone up. Otherwise, this ratio was anywhere between 30 to 60, but this ratio since 2011, I will show you, has gone up, and now it trades comfortably in the range of 60 to 100. So this thing is also, something which you can decode it as being bullish for silver, because silver should not be trading at 1:100 kind of a ratio for gold, especially considering that there is a lot of industrial demand for silver as well. So I will show you certain charts for that. But just before that, if you look at this is a very important thing. This is the international price of silver futures, which is 48.58, whereas the spot price is 48.6. So you can see that there has been a convergence between the spot price and the future price. What had happened some days back was that there was a divergence that had happened in LBMA, which is London Bullion Metals Association, over where silver prices are determined. So future of silvers were trading at a discount compared to the spot, which basically meant that there was shortage of silver. People were wanting silver deliveries. Now that gap is closed. So the stress in the system is a kind of eased out a bit, which is good for silver. And this is called backwardation. So that backwardation is now over. So any movement in prices of silver are going to be now led by demand and supply, and they are hopefully will be more orderly rather than haphazard. So that is one important thing I wanted to share with all of you. Now let us look at this I will come to later. Now let us look at the gold silver ratio. But there's a interesting piece of trivia. The Silver Thursday, if anyone wants to read how the price of silver actually went up and what the Hunt brothers did and how the stock market correction happened. So basically this is how the price of silver went up in 1980 to $50, and from there it fell to $3. So silver is a very volatile asset, and you must read these things to understand the volatility in silver. And that is where I maintain that gold as an asset is much more stable than silver, and it should perhaps be having a higher weightage in your portfolio than the silver weightage. Silver weightage, in my opinion, should not be more than 3% in your portfolio. You can maximum go to 5%, but gold as an asset class perhaps deserves a bit more weightage in your portfolio, maybe to the tune of 10, 15, 20%, depending on how you want your portfolio portfolio to be designed. And if anyone is interested in making their portfolios, I am a registered mutual fund distributor as well. I help people make very solid, robust mutual fund portfolios. So if you want your portfolio to be evaluated, or you want some suggestions, or you want to make a new portfolio with a specific goal in mind, please do contact me through the Google form in the description below. I will have a discussion with you, and then if all is okay, then I can help you build a portfolio as well, and it's all free of cost. So now coming to the important one, which is the gold silver ratio. So over here, as I had mentioned earlier, the gold silver ratio actually went to the bottom over here in 2011, and this was at about 32. But from here something interesting happened. From here the central bank started buying gold in their reserves, and it went to as high as 125. This was the time when silver prices were completely suppressed, but from there 125 it has come down to 60, and now it ranges anywhere between 60 to 100. So you can see right now we are at about 80. So we are somewhere midway. Can silver prices rise more from here? Yes. Can this ratio come down? Yes. So this basically tells you that there is silver perhaps might have some more upside to go if everything is okay, and this is a very important ratio to keep in mind. So of course this ratio is not that 30 or 20 that it is at an all-time low and it can't go lower. It is not like that. It is in fact on the higher end of the range, so it is still at 80, and there are chances that especially with the things that I told you in terms of the mining of silver, etc., it can of course go down, which would mean the price of silver can go up. But if you ask me what is my preference in terms of the metals, I would say that I prefer gold any day more to silver. Even in my personal allocation, I have about close to 15% of gold and about 1.5% of silver, primarily because silver volatility is very high and it doesn't suit me to have such high volatility in my assets, and that is one reason. But each to his own, and I would not recommend more than 3% of silver in your portfolio allocation as well, unless of course you're trading and you know what you're doing, because the drawdowns are very, very severe in it. Now let us have a look at the gold chart. So over here, this is the price of gold, as you can see. So gold goes into some sort of a consolidation phase. It was in a consolidation phase, if you see over here, from somewhere around April to September of last year, and then it kind of September of this year, and this is when it kind of broke out. So this is September 25 is when you can see that it has broken out of this range which it was stuck for last 6 months, and then it has just gone parabolic. So gold will have these phases when it will not do too much for a long period of time. So but after that the consolidation, it basically moves up. So it is quite possible that we are still in this range of 4400 to about 4000, and we consolidate over here for 3-6 months more, and after that we take off. Because if you see over here, people like JP Morgan and all are also saying that they see average price of gold at about 5000 per ounce. So right now it is 4000, so that's a 25% upside in 2026. So they're saying gold remains our highest conviction long for the year, and we see further upside as the Fed enters the rate cutting cycle. So that is another factor to keep in mind, is whenever the liquidity is abundant and Fed cut interest rates, then gold and silver do tend to rally. And we are seeing that Fed perhaps will cut one more interest rate this month, and then they are saying 3 more into next year. So if that happens, then that's going to be very bullish for equities and gold both. So perhaps in my book, then gold has a direct correlation with the world liquidity. That gold has got direct correlation with safety, with currency hedge, with inflation hedge, and so on and so forth. So in my portfolio, there is always a higher weightage for gold, but not to say that silver is not important. Silver is also important, but it is highly volatile. If you are able to stomach the volatility for a long period of time, then you can consider increasing your investments. Otherwise 1 to 3% is more than enough in my understanding for silver in your portfolio. So that's it from me now. I hope you enjoyed the video. I hope you learned something new today. If you did, please do subscribe to my channel, and in case you're interested in building a mutual fund portfolio, please do contact me through the Google form in the description below, and I shall see you soon with another update. Take care. Bye bye.